Hi, everyone. My name is Ashley Mataisi. I am the Director of Outreach at 10 Capital. I'm joined today by one of our partners, David Blankman, with CrowdVision Advisors. David, thank you so much for taking the time today.
I appreciate it so much for the invitation.
Absolutely. So we're really looking forward to your presentation on Regulation A+ funding. If anyone has any questions, please feel free to drop them in the chat box or raise your hand, and we will get them answered for you after the presentation. But David, if you want to go ahead and share your screen and kick us off.
Okay, well, welcome everyone, and I hope your time is well spent, as mine will be hopefully well spent here, to help you to understand vision into Reg A+. One of the things about this whole idea of investment crowdfunding is being an entrepreneur. And for me, it started a long time ago. I consider myself a lifelong entrepreneur. I started Dave's Lawn Care when I was 13 years old in Satellite Beach, Florida. And as we know in the venture capital world and angel investors, the thing they look for as soon as they can find it is an exit for the companies that are either in a venture capital fund or they have invested in. I built up my neighborhood, 4 streets. I charged $2 for the mow and $2 for the trimming of the yard. And the next neighborhood over, I had a competitor. I was 13, he was 18. And he said, you know what, Dave said, you're doing a good job over here. I want to expand my business. I want to buy you out, name your price. So in those days, you know, I didn't know how to value a company, or valuations weren't on the tip of my tongue. And I said, okay, 500 bucks. And literally the other kids showed up with $500. And I experienced at 13 years old what entrepreneurs experience and want to experience is either a buyout or go public on the stock exchange to have an exit for their work in their business. In the other parts of my career, I also was a founder of Blankman Asset Management, the only IRA. I helped create access for private investments for fiduciaries, CFPs, CFAs, and independent IRAs. I advised Reg A+ issuers on online marketing and advertising for live deals. And I also helped launch the deal sourcing, vetting for Title3Funds.com. So really the best piece of experience for me in doing this is actually doing this. I helped raise successfully on one of the portals for Title III of the Jobs Act, regulation crowdfunding on WeFunder, an offering for new chip in 2018. We raised $611,000 from 605 investors. And that's me on the far right in the black shirt. And that was my team. And it was a wonderful experience to be able to actually do a regulation crowdfunding offering, rather, as I say on a lot of calls with founders over the last couple of 3 years, read the Crowdfunding for Dummies book and call myself an expert. I think expert is all about hands-on and actually doing and accomplishing a raise. So what's today's topics? First of all, what is Regulation A+? Opportunity for emerging growth companies, and also the opportunity for investors. And what kinds of businesses work best for this kind of investment crowdfunding? And we'll cover those topics today. The revolution in 2012 was the Jobs Act and Title III and Title IV. Title IV is commonly called Regulation A+ to the mini IPO. And the facts about that new exempt security offering created by the Jobs Act is any US corporation, startup, can raise up to $50 million in 12 months. A very innovative part of this new legislation was it's okay to advertise the offering online, and that includes web, app, social media, and email engagement with investors. The offering can be live on your company website. You are not in Title IV restricted to using a portal as you are in the Title III of the Jobs Act funding. You have the option, though, to list the offering on a portal if you so choose to boost the exposure to investors. The opportunity is to basically, in this area, to harness the power of the online mobile society. I have talked with thousands, literally, of startup founders over the last couple of 3 years in this space. And you know what? Now that we really are in the mobile society because of the obvious push that COVID has given e-commerce and just about everything. And I tell founders all the time, people are ordering everything from goods and services from their home on their mobile device. Why not investments? And it's absolutely true that this is happening in a big way, and it's a big push forward for investment crowdfunding overall. You can seek multitudes of investors this way online. And like I tell the founders on my calls, they're literally open 24/7. What's wrong with the idea of doing your next investor close on a raise while you're sleeping? Nothing at all. And that can actually happen in this space. You can open up a Reg A Plus to US and international investors. Just think of the millions of people, investor eyeballs, that if we focus on telling them about the offering, how we can find that number of people to come over and see. Diversity, it just brings in the whole idea of diversity, people from all backgrounds, all walks of life, and all works of life can now raise capital online with the Title III of the Act. And into the emerging growth area, the Reg A Plus, you also have opportunities for emerging growth companies to grow and scale into Series A. And actually, the Series A to migration path, the IPO, is possible here, and it can start with a seed on a Title III platform, a seed raise, let's say 500,000, and then do a late seed of $1.5 million, and then move into the Reg A Plus and do your Series A for $5 million. And then if you want to, you don't have to, you can put a plan together to IPO at the end of 12 months. So what does this do? It gives investors in early stage deals, just like my story about Dave's lawn service, a chance to see an exit. Actually see a potential exit for an investment that they make. And this can be a real impetus to getting investors to invest in private offerings, especially the ones that are online. So what we're doing basically in this space is disrupting the conventional investing and fundraising across the board. The conventional broker-dealer, syndicates, high commission distribution of IPO shares and even private placements is being replaced by the online opportunity for basically teams and the founders to do a lot of the fundraising steps themselves. And also, one of the things that's happened in this space over the last, say, 10 or 15 years, the IPO has become more of an exit opportunity for VCs to cash in as retail gets holding the bag. I really like the way that's said because it's true, but this chart really says it even better. IPO traps, the paradigm shift in capital raising. Old world tech giants return plenty in the public markets. On the graph, you can see from my pointer, this is public market increase in equity after they went public. And this is prior, where the private placement investors enjoyed the ROI of it being early investors. This is since 2004. These are from the 80s up through very well-known companies, obviously, from 2004 up through recent 2013. Just look at the difference where the private value creation is just overwhelms what has been available to public investors after they go public. So this whole idea of the Jobs Act and the creation of Title III and Title IV and Title II of the Jobs Act was to level the playing field for investors to have an opportunity and fundraisers, issuers, to have an opportunity to raise capital to run and fund their business. And mostly importantly, investors have a chance to get some of this value creation and have the opportunity to invest in early stage deals. This is a slide that you're more than welcome to screenshot if you would like, because I think it's one of the ones that really, I've looked and looked for places where this is told in the right way that would be understandable, but the hybrid facts between the comparison of Reg A Plus, let's just say it's a Reg A Plus stock issuance from a security issued on Reg A, have both characteristics of private and public investments. And the other investments in the private placement world don't have this. So this is a very important step to understand the hybrid facts between this. All investors can purchase shares of public and Reg A Plus offerings, right? Non-accredited and accredited can buy Home Depot when they do their IPO on the New York Stock Exchange. All people can invest in some of the businesses I'm going to show you here in a minute that are currently live and offering under Reg A plus of the exemption are available for all people to invest. Public and Reg A plus investors are passive. This is very important to understand. Passive investors don't have a say-so in your business. In the traditional, which is great, and it's awesome that Reg D and the angel investors and the venture capital have been able to fund great businesses, and literally, I think it's great they made a lot of money doing it and doing these kind of offerings. But it's the fact that most of those investors, when they're early, want a say-so in the business. They want a board seat. They want an active role in the business. In this case, the Reg A plus are passive investors, just like the public markets. Home Depot investors have no say-so over the actions of the board and the management at Home Depot is the best way to put that. Public and Reg A secondary trades after offering closes, very important. As soon as the IPO, public securities trade immediately, right? Right after the Reg A plus closes, those are able to trade immediately. There's no 1 year Rule 144, such as in the private placements under the Reg D exemption. They do this though under ATS, Alternative Trade Systems trade platforms that are open now, more opening in the future to provide liquidity to both Title III and Title IV securities after they're issued. And the case in Title III though, investors do have to wait a year before they can get any liquidity, with the exception of trading it back to an accredited investor or somebody close that they know, like a father or somebody or a person that they know. The next step is the special purpose vehicle, cap table management. Then one of the objections that many issuers hear when they talk to investment capital raise advisors, that the cap table is too big with too many small investors. Well, the SPV has been literally announced by the SEC under the new regulations that are coming forward for Title III. It's been available in Title IV, to where you actually put all your investors into one LLC. It acts as one investor, one vote, that it can be managed by the chairman or the CEO of the business or of the company. So this all distills down to the hybrid investments, democratizing investing and capital raising, and leveling the playing field for issues and investors. Such an important theme in this effort to get investment crowdfunding out and known by the many people in the public and the private markets together. Is the education challenge that we have on our hands to get this information out so that people know and people take advantage of these exemptions, and especially investors take advantage of the investment opportunities. So what businesses work for Reg A plus investment crowdfunding? And it's literally today, anything in the area of medical technology. You can imagine how great those businesses are looked upon by investors, especially in investment crowdfunding. Clean energy, food and drink, transportation, especially electrifying vehicles. It's amazing to me how that business is growing. Driverless cars to some extent too, but that's tending to be a little slower coming along. Retail e-commerce, people are home ordering everything on their mobile device. And like I say, why not investments? So e-commerce is a big growth. And artificial intelligence, advancements in high technology are really moving forward and changing all the things that we do in our life for the better. So I think it's really an important area. So what kind of deals can you buy today? This is actually a live deal that is available. That was my client in 2018 for Reg A plus. Live now, they raised a total of $18,172,000, and you can invest as little as $100 today on TerraCycle if you choose to do so. And you'll wonder, so what does TerraCycle do? Well, it's green waste management. Can you imagine what a good thing that is? You know what this bundle of stuff is that these three guys in green shirts are handling? These are face masks from COVID from a hospital. Can you believe what a waste management challenge this is that this company has found a fix for? So I really do like some of the green technology things, and TerraCycle is doing great in Reg A plus, almost $20 million raise, and currently raising right as we speak online from the home from your lazy boy and your mobile device. Jet Token, this is a live Reg A Plus offering, currently a little over almost $7 million. And this is an app-driven reservation system for private, more, private jets where you can go with a group, maybe 4 or 5 people, or go by yourself. Kind of plays into the COVID, of safe flying, I think, somewhat. And then they also lease a fleet of Honda jet engine regional jets that can be used by these same providers of, for example, on the example here, it says going from Los Angeles to San Francisco on 925 or 20. These are your choices. I think this is a cool business. I love anything to do with, transportation, especially in the air. And this would be something of interest. And you can invest in Jet Token today, Reg A Plus Live now, for as little as $99. So the really important takeaway from this is, the summing up, the introduction or vision into Reg A Plus is every person is now an angel investor. They really are. They can invest in private early stage offerings. They can do it from the comfort of their homes, and it creates a whole new opportunity for investors and issuers to fund their businesses. Emerging growth companies can now raise funding online and IPO if they choose at less cost. And the less cost thing is important. In the traditional capital raising in Wall Street is with a matrix or a group of broker dealers called a syndicate that charge high commissions to tell people about your offering that are customers of the broker dealer through their brokers. And this is what this whole world is tending to disrupt. Is it not the fact that that's bad or it won't still be done in some cases, but now you can actually do an offering online on your own website with a social media strategy that is really another webinar that I'd like to do at some point and have the access to do so on just the strategy for social media and digital marketing outreach during a live raise for Reg A Plus issuers. And that is something very as well. Companies can launch social media. Excuse me. Companies can launch social media campaign, advertise, and lens thousands of investors. Very important theme of this whole thing is it's kind of, a little bit of do-it-yourself approach, but you do it yourself with tons of investors. So I'd like to spend some time, if you can hear me again, my headset went off for a minute, just to do some questions that you might have. And I prepared a list that actually Ashley helped me to prepare, if these are valid. So let's listen to some questions and I'll provide some answers for you.
Okay, awesome. Thank you, David. So how long does it take to prepare for a Reg A Plus?
The Reg A Plus depends a lot on the legal, because the legal is the first step. And I would really recommend here that you hire a really good legal team or group to do, because the Form 1A is a very complex document. It requires a lot of knowledge about SEC language and how to submit. So you can shorten the process by getting a really good legal person to help you submit Form 1A. That can be from 60 to 90 days of time. And then during that time, you prepare your offering materials, your website, your social media strategy. So I think probably a good guess would be 4 to 6 months, as long as you get the legal done really expediently up front.
Okay. And what is the cost to prepare this?
Legal cost, which is the first step, is between $25,000 and $50,000 for a properly done Form 1A. And this is something that, is really an upfront cost that the issuer has to be prepared to do. If you include the social media outreach and the costs and expenses for doing that over time, I would recommend that you consider between 4 and 7% of the raise amount that you intend. Just take $10 million and times 4, a range of 4 to 7%, and you'll get an idea what the cost is to be launched and live.
Mm-hmm. Okay. And how long do these campaigns typically take?
Again, that depends on the raise amount. Let's say the higher the raise, the 15, 20, 25 million, or even 50 million may take longer, but you have a full 12 months in which to accomplish your raise goal. And then you can apply for an extension on that 12-month period if you come up on your 12 months and you're still not satisfied with the raise amount.
Okay. What must be done to have a successful campaign?
The most important thing is the legal upfront the right way, and second to that is a good social media campaign strategy in possibly hiring an agency or hiring someone to be a digital marketer on your team that is employed. The strategy is planned ahead of time and then launched during the live offering, in which time we attract as many investor eyeballs from various sources of social media, be it Twitter, Facebook, whatever the channel that we choose to go into is done on an ongoing basis, and that will create the click-throughs on a daily basis. And then you have a raise goal that you've set, and you can actually do the math on metrics on the portals or on your own website through Google Analytics to figure out exactly what those numbers need to look like. And I help my Reg A Plus issuers with that campaign strategy. It really is one of the most important parts of a successful campaign strategy.
Okay. And just a reminder, if anyone has any questions, please just drop them in the chat box. I do have a question myself. I'm wondering if you can clarify or go over, again, the minimum raise amount in order to be able to actually raise the funds.
Okay, in Reg A Plus, you can set a reasonably low minimum. There is actually no restriction, since you can do the offering on your own website to have a minimum surpassed goal. Okay. The thing about Reg A Plus, it's more expensive to register the offering. Like I said, 45,000 for attorney isn't cheap. So most issuers would not do an offering in the size of anything below 1 million. I did have a client in Reg A Plus in 2018 that raised $2 million in Reg A Plus because he did the math and he was able to more expediently do it on his own website rather than doing the Title III, which restricts you to being on a registered portal. So that's the difference there. In the Reg A Plus, you have a little more autonomy to have it on your website, but it does mean you want to raise a higher amount. So I'd say it makes reasonable sense that 5 million is a good minimum to think of for Reg A Plus. Doesn't mean it has to be that high. It could be 2.5 to 4, but anything below $1 million, you definitely want to consider the Title III equity crowdfunding on one of the portals.
Okay, wonderful. Just give another minute or so for questions. I do have a poll that I'm going to launch. So if you could be kind enough to answer these questions to our attendees, that would be great. Now, David, what are some other big name companies that have been successful doing Reg A Plus offerings?
There have been several that have done very well. Some of the early ones, Akimoto Motors is one of the earliest successes in doing that. And Akimoto Motors did actually go public on their offering. Chicken Soup for the Soul was one of the early ones, a well-known book that most people knew. And they went Reg A Plus 2 years ago, and they actually went public as well. They IPO'd at the end of 12 months. Most of the Reg A Pluses, like the ones I've shown you, like TerraCycle, what they do, TerraCycle is a good case study, is they did their first Reg A Plus in 2018. And I believe they raised about 7.5 million. And now they're in their second raise. So see, you can do more than one, and you never have to go public. You can stay public as private as long as you want. Mm-hmm. So this is one of the important things about this whole new way to raise capital. And the reason it's good to subsequent raises later on is you have one of the biggest assets that any company could ever have, especially with the kind of business that TerraCycle is, and that's the investor army. I talk about the investor army on all my calls with founders and what an asset that is, because you develop it, you bring them in, you talk to them, they become investors. We actually put them to work during the subsequent raise, like the Reg A Plus. Don't you think that TerraCycle's reaching out and saying, hey, you invested in our first deal, we got another one, why don't you double down and or send us the name of a friend that would be interested in knowing about our offering. All on social media and all through online methods. So this is an important aspect of this raise opportunity, is the mini IPO is there if you choose, but it's not mandatory that you do so. And so you have the investor army, and one of the, there's a big Legends, it's called Legends. It was a early crowdfunding offering in Reg A Plus. It was a movie studio that raised. I think they're in their 4th Reg A Plus raise. You imagine movie fans becoming investors. Doesn't that sound interesting, right?
Yeah, very.
So that's another one that was successful from the early days. We're just now starting to hit our stride because the COVID push, as I call it, is helping more issuers and founders to find out about this method of fundraising, and more investors are staying home and ordering everything on their iPhones. So why not invest? So we're seeing a double push. So the business is increasing this year. Reg A Plus is becoming more and more known about. And one of the reasons for doing more of these webinars is getting this word out, getting the information into the hands of issuers. And like I mentioned to you on the first, before we started this call, I really like the idea of getting traditional angel investors involved and getting them to understand that this is a neat way to invest for them as well. Now that we can't really go to pitch events and meet founders face to face, let's at least do a webinar on Zoom, talk to people that way, and then do our research on our iPhones from our house and invest in some really promising early stage and emerging growth in the fact of Reg A Plus offerings.
Wonderful. Well, if you could just quickly, David, go back to the screen with your contact information. We are nearing the end of our time, so I just want to thank everybody for joining. David, again, thank you so much. This was really informative. If anyone wants to reach out to David, you can see his email there at the bottom of the screen, or I would be happy to make an introduction as well. And with that, I think we will go ahead and close out, and everyone stay safe and healthy out there.
Thank you so much, everyone. Appreciate it.
Thank you.
Bye-bye.